Hey, this is Seth with In Demand Career. I show people how to get jobs in digital marketing with no previous experience or education. And I also share practical real-world advice that they should teach in school, such as taxes, everything you should know about taxes to help you save money, do taxes the right way, and actually be an adult about taxes. Most people get out of school after 16 years of school and just are like, what? What's all this money being taken out of my paycheck? It's taxes. So what I'm going to do in this video is I'm actually just going to read from my book, Skip College for Success. Hey guys, here's a quick plug. I'm actually putting my entire book, Skip College for Success, on the web for free for anybody to read. I am almost done with this process. I think I'm about 2/3 of the way done. This chapter on taxes will be available by the time this video is published. You just click the link below this video and you can read and see the images of everything I'm talking about here. And you can go over it at your own pace. But if you know somebody in high school, somebody who's questioning college, just tell them to go to skipcollegeforsuccess.com. I have put the entire book on the website for free because college has become such a joke, and it's painful now with kids paying full tuition to do Zoom calls. It's just a mess. And I want to get this message out to as many high schoolers as possible. Taxes, or how the government legally takes your money. Note, I'm not a tax professional or attorney. This is not legal or tax advice. It's just basic info and my opinions. So I was on a plane ride to LA, sitting next to a 20-year-old majoring in communications. And basically, I started talking to her about how Washington State doesn't have any state income tax. And I thought, oh, she didn't know they don't have state income tax. But she actually said to me, what is state income tax? And I looked at her like dumbfounded that she probably knows more about the sonnets of William Shakespeare than she knows about taxes. So the first point I'm making in my little 6-step thing here is just taxes exist, guys. Whatever you're being paid or your hourly wages or your salary, you're making less. Taxes suck. The more money you make, the more you will feel that taxes suck. And it's more like, I believe taxes in essence are good in theory. If we need to pay for things, we need to pay for infrastructure. But when you see our government being so inefficient with how it manages and operates, that's when people start getting frustrated. And you're also going to see that as the more money you make, which is what I want to teach you guys to do, you are going to get penalized by paying more taxes, even as you're just making a little bit more money. So I want to help you save money and give you like some insight onto this. So I'm going to start at the very, very bottom here. Let's say you're one of those recent college grads making $25,000 a year, $12 an hour, which is really what most college grads make. You're actually not making $12 an hour. You're really getting about $10 an hour. So let's just start with the very basics, guys. And I suggest you check out a website called Paycheck City, which does these tax calculations for you based on where you live in the country. And by the way, this is for the U.S. because I'm a U.S. citizen. I can't really speak to taxes in other countries, but it's the same general principle. So let's say you're working 40 hours a week, $12 an hour. You're going to get taxed on 4 levels: the federal level, the state level, sometimes the city level, and then your Social Security and Medicare taxes. Social Security tax is what goes into that huge fund that's supposed to be there for us when we hit 65 or 70. You're supposed to get a monthly check from the government, depending on how much you made throughout your working career. And hopefully it'll be there when you guys are 20 years younger than me, hopefully it'll be there 40 years. We don't know if it will be though, but you still got to pay taxes on it. State income taxes vary from state to state, and we'll talk about that. But let's just take a look at if you're a Washington State resident and you're making $12 an hour. Every week you're thinking, oh my gosh, I'm making almost $500 a week. Woohoo. Well, actually the Fed is taking $45. Social Security is $30. Medicare is $7. And then some other random unemployment insurance from being in Washington State. So you're really walking home with almost $100 less a week than you earn. And when you're making this little, guys, you know these amounts make a big difference. You know, it's a lot percentage wise, but everything is done on a sliding scale. Now, when you get hired as for a job, this is very, very distinct from working as a freelancer. We'll talk about that. You usually fill out one of these forms. Now, I actually know a guy who protested and legally found a way to not have to fill out one of these forms. But most of us, this is what you are compelled to do, which is essentially giving the government permission to take money out of your paycheck. And the amount of money that's taken out, it depends on your personal situation. Like if you're married, single, things like that. So yeah, like this is what I was trying to say is you're making so little, the government takes $45 a week. That's like $2,300 a year. And what I was saying is the government taxes on a incrementally increasing scale, depending on how much you make, which we'll show you in a second. You're only going to owe them $1,300 at the end of the year. And that means this is what I think is really stupid about how our culture works, and also why I'm doing this video in October, 6 months before the tax deadline, because most people procrastinate. In April, you're going to, this person would get a tax refund, and people often celebrate this, like, oh my God, I'm getting a refund from the government. I've made new money. Oh my God, I'm going to go buy things. It's like, dude, it's your own money. It's your own money. The government just took it from you, held onto it, and gave it back to you. Most people don't even really think about this. They just, go to work and get their paycheck. So let's take a look a little bit more at this. So $25,000 a year, federal income tax ends up being $1,342. Your Social Security ends up being $1,550, $362. So let's talk about how. So and I'm getting into a little more how you actually do your taxes. This is where people get like completely floored because it's not taught in school. The good news is, and this is what's happened under Trump, and it's going to, it could change. I don't know what's going to happen in this election. You get something called a standard deduction. And that means that for every year, there's this standard deduction amount, which means that this is an amount you get to subtract from your income and then say, oh, I made this much. Remember, the less you report as income to the government, the less you pay in taxes. So in this case, this person making $25,000 a year subtracts $12,000 from that $25,000. And basically that is how you go from owing $2,340 to $1,342. So again, that's how the person gets like $1,000 tax refund of their own money. Now, something most people don't realize is that you actually have the ability to affect and change how much money the government subtracts from your paycheck every week. And it has to do with federal allowances. When you fill out W-4 form, there's a section called number of allowances. Now, here's the thing, guys. So you're going to have to pay your taxes no matter what. But I think it's good and empowering to know you should have the right and the choice to say, well, look, I'll either, I don't need the government to be like my babysitter and hold my money all year. I'm going to hold on to more of my money. Maybe I'll put it in the stock market. Maybe I'll use it to invest in training. Maybe I'll use it to pay my bills. I'm gonna take care of it rather than letting the government hold on to it all year and then give it back to me in April and me have like a little celebration, like, oh my God, I made money. So basically, if you put 2 in the number of federal allowances, and there's a worksheet that explains how to do this. Basically, it's like if you're single, this is what I've done most of my life. If you're single and you don't have any kids, you have a situation where you can put in 2 in this situation. And in this case, you can see how the 480 becomes 416 take-home pay. So the government, instead of taking out $45 a week, they only take out $25 a week. That's $20 extra a week. Now, it doesn't sound like much, guys, but it adds up over time. So the funny thing is, since you owe about $1,342 in federal taxes, we just figured that out up here. Remember, $25,000 minus about $12,000 means you have $12,000 in taxable income. That's why the federal income tax is $1,342. And there's charts to determine all of these things. But the funny thing is, the government takes out $25, 52 weeks a year. That's $1,300. That's about what you owe. So think about this. You don't get that $1,000 tax refund. You're not walking around like, oh, I'm going to buy a new PlayStation because I got a tax refund, which, by the way, I would totally do. But you just kept the money in your bank account that whole time. So that's really a choice most people don't realize. Like, you could have been using that money. You could, at the very least, you could put it in a savings account, the interest rates are crap. But if you put it in the stock market, or you could have used that $1,000 in your life rather than getting it back and having the government just sit on it for a year. This is that worksheet. One for yourself. You always get one. And then one you can either single, married, and then all this stuff with married. I've never been married, so I don't know anything about that. But some people, now the interesting thing is some people have all these other extenuating circumstances and they have a ton more allowances and they actually get to have less withheld from their paycheck, but they still have to pay at the end of the year. Anyway, that is part one of this little lesson here. Okay, so now we're going to talk a little bit more about some other taxes. Like the federal tax is the major one. But there's also the Social Security tax, guys. And remember, Social Security is supposed to be the system in place. It's a big pool everyone pays into, and the government's supposed to send you checks based on how much you earned when you were working when you get to be 65 or 70 years old. You have to pay this if you're an American citizen. And you actually see that if you're only making 25 grand a year, you're actually paying more in Social Security taxes than federal taxes, and you have to pay $362 in Medicaid as well. And this is how somebody goes from making $12 an hour to really only making $10.45 an hour. And the reason I'm pointing this out to you guys is because the taxes that really hurt people are not on the billionaires. It starts to hurt you more and more the more you incrementally move up in life. And this is why I got such a rude awakening when I started making over $75,000 in California. We'll get to that in a minute. So let's just take a quick look at we're going to throw in the difference. Remember, I'm doing this in a very, very slow because this is how a lot of you guys are going to go. You're not going to jump from, 30,000 to 150,000. Let's say you go from making 25,000 to 50,000, which is very common in my students. Let's say you're still in Washington State, which doesn't have any state income taxes. Now you're paying about, you're paying between, the effective tax rate here goes from 5.4% to 8.74%, which is a pretty big percentage jump. Basically, you're making twice as much money, but you're paying 2.5 more in taxes. And this is just a very small example. You're going from paying 13% in taxes to 16% in taxes. Okay, all right. That seems like maybe it's not that terrible, but really what's happening now, you're making $25 an hour and you're really only bringing home $20 an hour. That's $5 an hour. That's almost a quarter of your your earnings going to taxes, which is pretty crazy when you think about it. But not as crazy as what happens when you start to bring state income tax into the equation. Now, let's say you move from Washington to California. And again, guys, we're still at very low income levels here. Now you're 25K. The state income tax, because you're making so little, is not that bad, but you're paying an extra $300 in state income tax. But at $50,000 a year, you're paying $1,630 in state income tax. And this is how the state income tax starts to really sneak up on people. Basically, when you go from 25K, which is not a livable wage, really, especially in California, you start making 50, which is barely livable in California. I shouldn't say barely. I mean, if you're young and you're making that and you're out of college, that's a great salary. But California is a very expensive state. You're actually paying 4.8 times more in state taxes than if you make half as much. Isn't that crazy? 333. Just like you'd be thinking to yourself, okay, I make $25,000 a year and I'm getting taxed $333. I make twice as much. I should be getting taxed about $666. But no, I'm getting taxed $1,630. And this gets worse. So let's see here. So basically, now, let's say you're starting to climb the ladder in California and you're going from $50,000 a year and you're finally making that $100,000 a year. You've made it, so you think. Actually, look at this tax. You actually only take home $70,000 of that $100,000. $30,000 goes to taxes. Isn't that freaking nuts? Now, if you're making $50,000 a year, you take home $40,000 in California. So let's break this insanity down. This is a combination between California state taxes and the fact that the federal marginal rate jumps up. Look at your marginal tax rate and your effective tax rate. And the marginal tax rate is basically, God, I don't want to, it's boring, but you got to know this stuff. The marginal tax rate is basically like where your income, like if you make $100,000, you're taxed more. You're obviously taxed more. But it's a combination of, let me see, I didn't want to even get into this, but I said, you got to learn about this. I can't believe they teach you about like the Pythagorean theorem. They don't teach you this stuff. You're taxed on brackets. Okay, so let's like from 0 to 25,000, and then from 25,000 to 50,000, and then from 50,000 to 100,000, etc. Right? So let's say if you make $100,000 a year, they're going to tax everything. It's going to add up. They're going to tax, let's say this percentage, let's say this is 8%, and let's say this, and these aren't the real numbers, guys. I'm just showing you how this works. And let's say this is 15%, and then let's say this is 24%, right? It gets higher and higher. They're not taxing the whole $100,000 at 24%. They're just showing you that's the bracket you're in. But in reality, the effective tax rate jumps from, if you add up the 0 to 25,000, the 25,000 to 50,000, if you add all these up, you get to this, this number here, 15%. So now instead of paying 8.74%, you're paying twice as much federal. Your state went from 3% to 6%. And your total income tax burden went from 20% to 30% between all these different things. So now you're paying $6,000 a year in California taxes. $100,000 a year should be $48 an hour. It's really $14 an hour. $14 an hour, guys, which is more than what most college graduates make, is going to taxes. So I hope this makes a little bit of sense, and I would love your feedback. I know I'm talking a little bit quickly, but the fact of the matter is that these taxes are our reality, and I'm going to get to my next point here in a moment. The things you can be aware of is, number one, be aware of the taxes. Just be aware that they exist. This is huge. And also be aware of where you live. This is something I started to realize, like you're paying an extra $6,000 a year in state taxes in California, and you can look at other states and be like, let's say you live in Washington State. That's $6,000 extra you have in your bank account every year. If you live in another state that has lower taxes, that could be an extra $3,000 a year. Let's say you're making $50,000 a year. You want to look at these amounts and put that into your general lifestyle planning. People just don't even think about this. I lived in California for so many years. I wasn't making any money, so I didn't notice these taxes. And then as soon as I started to make over 70,000, I was like, holy crap, why is my paycheck so small, even though I'm supposed to be making more money? So yeah, guys, most people don't even realize, and I go into all these other things about cost of living. Now, what can you do about this? I want to give you some insight into what you can actually do. Now, the main thing you can do, actually, let me tell you the pros and the cons. I'm not going to get into the property taxes just yet, but basically, I'm all about helping people get jobs here, and I'm also all about entrepreneurship. But you should actually understand there is a benefit to having a job that most people don't realize, and a hazard of working for yourself. And I'm just talking in terms of taxes, okay, guys? And I may do entirely separate video on this, but it's very important to understand this. So remember, I talked about federal tax, state tax, and then the FICA, which is Social Security and Medicaid. Now, you saw how much that was. Remember, it was like $1,500 a year on the person only making 25 grand a year. So that adds up over time. Like look at the person making 50,000 is paying 3,800 a year. The person making 100 grand is paying 7,650 in Social Security and Medicaid. Now, one of the benefits of having a job is that your employer pays half of this tax. You guys might not even realize that. The employer pays half, which is kind of mind-blowing. So that means, let's say you're making 100 grand in California, you're getting taxed out of your brain from the state taxes and the feds. But at the very least, out of the 7,650, the employer is paying about half, which is, I don't have a calculator here, but it's about, what is that, $3,600, right? That you don't have to pay in taxes. That's huge. Now, what's going to happen, and this happened to me when I started to work for myself, is that I was, working for myself. I was really excited. I'm self-employed. There's something called the self-employment tax, which is basically your own FICA. So now, suddenly, oh crap, I have to pay all of the FICA myself. You also understand this is one of the many burdens an employer takes on when they hire you. And this is why many employers choose to have freelancers. Because if you're freelancing for me, I don't have to touch your taxes. I send out a 1099 form. I say, this is what I paid you, and you take care of your own taxes. But if you're my employee, then now I'm responsible for you, and I have to pay half of these taxes for you. Not the federal, not the state, just the FICA. It's very important to understand. That is a hidden benefit in many cases. So if you are, and this is very important if you're self-employed, guys, because I will tell you that when I started making more, a little more money and working mostly for myself, or even when this is what I'm going to talk about next, when I started supplementing my job income with freelance and, website income, I didn't understand self-employment tax. Like I say, let's say you make $50,000 a year at a job. Great. The taxes are pretty much taken care of. I mean, the government takes the money out of your paycheck. The employer pays half of your FICA. You're good. And then you pay the rest out of your paycheck. But let's say you make an extra $25,000 a year working for yourself, freelancing. And again, if you guys want me to, I can do this as a totally separate video again, but I think I wanted to give you guys the overall picture of everything. If you make that money, $25,000 a year, you have to pay all the taxes on that $25K. That includes all the FICA, the Social Security, Medicaid, etc. This FICA here. You have to pay it. Nobody's taking it out. That's the thing. It's like, let's say your client pays you, $1,000 a month, and you have 2 clients. So you're getting $2,000 a month, 12 months equals about $24,000 a year. They're just paying you. They're giving you a check. There's none of this withholding. None of these things you'll see on a paycheck where it talks about the government, withheld. I was going to show you an example, but you get the concept. Like when you get your paycheck, it's going to have all those things I showed you here all taken out, and then you'll see the actual amount here. But you get paid by a client, none of that's taken out. You have to be responsible for calculating these things. And at a certain point, when you're working completely for yourself, you have to do something called estimated tax, which is you have to actually pay the government directly because they don't want you to just sit on your money all year. You have to pay estimated tax. But if you're still having a job, we'll talk about that in a second. if you still have a job and you're doing work on the side, which a lot of my students do and I did, and I'm going to tell you about the benefits of that. You have to be responsible, guys, because I got like knocked upside the head 2 years in a row when I was first figuring this out. Because remember, I thought I had paid all my taxes from my job. I forgot about my internet income, that I had to pay taxes on it. And then I remember my accountant telling me like, oh, by the way, you owe another $7,000 at the end of the year. And I was like, what? I thought I was going to get a refund. And I was like, oh my God, I forgot to pay the FICA, the self-employment tax. So this is stuff you got to be aware of. It's basically like this. Let's say you get a client pays you $1,000 each month. You got to calculate, take out percentages. And you should really only be putting like $700 in the bank and put the rest in savings. Put it aside because you're going to have to give a lot of it back to the government. But this leads me to one of my last points in this video. And I would love for you guys, you can leave questions here if the things I'm saying aren't making sense or you want more details. There is something called the Schedule C. And this is the big question is, okay, I've just told you all these taxes and they all suck. And it's like, how do you get out of them? Well, you can't get out of taxes. You are obligated. Even if you leave the country as a U.S. citizen, I know this because I'm in Thailand, you have to pay taxes. But when you're just beginning, before you are full-time working for yourself, there's something called the Schedule C. And a Schedule C is basically a list of, I actually might have a list of this here. By the way, I forgot I was going through my book. This is a little illustration of what I was just saying, how if you make $40,000 a year, you're paying such and such, and remember the employer is paying about half of the FICA, half the FICA tax. So remember, when you work for yourself, you have to be accountable for that. This is a Schedule C, profit or loss from business and sole proprietorship. And I'll probably do another video if you guys want to know about LLC versus sole proprietorship. When I was working a day job and doing other things on the side, I just did a Schedule C. Having an LLC, you could talk with lawyers about this, really not that important. You're ultimately going to be taxed as an individual person. It's all you. It always comes down to you. That's why also, guys, I'm just throwing this in here, but some people think, I could probably do a whole other video. Some people think, oh, my state tax is really high. California or New York. I'll create a business in Nevada or Delaware or Florida where there's no state income tax. Well, it doesn't matter, guys. You are taxed on where you live, not the address of your business. That's a whole other conversation. But let's just talk about what is possible with a Schedule C or your own business. Now, this is the only real way. I shouldn't say the only real way. There are ways to write off expenses on your taxes. And the most common way people write off, write off is a deduction of your income. Okay? So remember, the goal is to report less income. The less income you report legally, I'm not saying obscure things, legally, the less income you report, the lower taxes you pay. Yay! Just like in the very first example I gave you guys, the government gives everybody, like maybe to make up for the fact that they are taking all your money, they give you a standard deduction. Remember the standard deduction. They say, okay, guys, listen, you made 25 grand, you made 30 grand, but we're going to let you take 12 grand off the table, which was, by the way, increased under Trump, might change, who knows, might stay the same. We're going to let you subtract 25,000. And I'm going to give you an example. Like this is the IRS, this is literally the tax tables, the 1040 tax tables, which shows you if your total reported income is between 30,000, like look at this, that's too low, but like let's say it's 30,000, right? And it's different for people who are single, married, etc. It'll tell you, here's what your federal tax is. If it's between 30,000 and it goes up by hundreds of dollars, right? You owe $3,000. You owe $3,500. and it goes all the way up to, I don't know what the maximum is on this. Hold on a second. If you make 70,000, you owe 12,000, right? So you can see the goal is that this number, which is the income you report after you've deducted whatever it is you can deduct, including your standard deduction, you want to get this as low as possible because you want to pay less. The higher this number is, the higher your tax will be. Your taxable income, it's called. So let's go back here. Your goal is to write things off. Now, for most people who are just working their day job and own a house and stuff, most people have to use a house to get deductions. And I can't even get into that because I don't own a house. One of my buddies was really, really insistent that if you own a house, you can write off mortgage interests on mortgage payments, blah, blah, blah. Not going to get into that. What I'm going to talk about is using the Schedule C. Schedule C is a report of your business gains and losses. And this is where, if you are taking my course or if you're doing something else, you're a graphic designer or a coder, this is where you report all your earnings and expenses. When you're first starting out, you will have expenses. In fact, when you thought about this, I mean, you want to be a professional digital marketer. Even taking my course is an expense. That's an education and training expense. You talk to your accountant and, get on the same page with them. You should be able to write this off. I wrote things off all the time when I was freelancing and making money from my film course and stuff. I was using a Schedule C. And you can see there's a part for income, which you have to report how much money you're making from your side hustle. And then these are your expenses: advertising, office expenses, travel, blah, blah, blah. A lot of these things, the funny thing is this is all very dated when you think about it. Like a lot of the stuff I deducted was software. I paid for hosting for my websites. I paid for some marketing. I paid for a bunch of tools, SEO research. I wrote all that stuff off. This form is still kind of like, travel, repairs, and maintenance. Well, you're not really going to have, hopefully, too much repairs and maintenance on this job. And there's definitely other legal and professional services. Now, your accountant will be responsible for helping you with this this stuff here, but it's really not. It shouldn't be that complicated. The important thing is, let me see. I don't remember. I can't remember where the educational stuff goes in there. And again, you need to talk to your own accountant. But the point is, having a side hustle or a side business, it's not your main source of income, allows you to deduct expenses. And this is really great if you are spending money on your business, or things that are related to your business. When I was running my film school blog, I would write off my Netflix subscription, and it was a completely valid expense because I would be watching movies on Netflix and then using them in my blog, which I was using to generate revenue. Now, this is an exciting part, I think, of taxes, which is where, once you realize you can deduct things, you can deduct travel, you really can deduct, like, let's say you're driving to and from a workspace to meet with a client or something. You can deduct the miles, you can deduct gasoline costs, things like that. Deductions is where you can get creative and save some money. Of course, I have to say this, don't go nuts, be ethical, and be fair. Don't start writing off things that are not related to your business. But one of the cool things is, guys, that there's, a lot of things you're spending money on that are related to your business that you can write off. And especially if you take a loss. Like, let's say you are setting up some kind of a side hustle, and the first year you are just, not making money, which I would hope you are making money, but let's say you are taking a loss, you at least get a financial benefit from being able to take those expenses out of your income. And what happens is on your tax, I'm not going to go through the whole tax form, but you shouldn't have a very complicated tax form. What it'll show is the Schedule C will go onto the 1040 as either, a gain or a loss. But again, you can really offset a lot of your, let's say you are making money, at least you can use your expenses to bring down your income. And that is where you get it. Now you're in the world of business. This is the world of where, you might even read about huge corporations having so many write-offs and so much loss and deduction that they pay less in taxes. And some people, oh, that's terrible. They should be paying all their taxes. Well, it's like, if you spend a lot of money on your marketing, you shouldn't have to pay taxes on that. That's why this exists, which is a good thing. You are spending money, you are incurring expenses to make revenue, and that kind of balances things out. So that is my take on taxes. Now, I hope that this made sense to you guys. I hope I'm not speaking too crazy here, but I would definitely, just to recap before I get to my last section, to say taxes exist: state, federal, and then FICA, or the Social Security, Medicare. And then talking about Schedule C and being able to write things off. And that's what I spent all this time talking about. So I would like to get your feedback on this video, by the way, because I really didn't. I just used my book as a guide, and I know I'm getting into some much more complex, detailed things. And I want you to tell me, do you like this? Were you confused? Did it make sense? Was it helpful? Let me know. And the last thing I did want to talk to you about, guys, is property taxes. A lot of, if you're watching this, you're in high school, and most people aren't even thinking about owning a home. And it's really sad because student loans have become such a burden for so many people. Let me find the thing here. Millennials they can't afford a down payment because they don't have any money because they're paying off their student loans. I just want to give you a quick insight into this, which is that every state has different property taxes. And this is also kind of nutty. Like Texas has no state income tax, but has high property taxes. And this means that if you own a home, so this is when you're thinking to the point where I want to buy a house, which a lot of my students do, you have to be aware of the fact that the property taxes in a certain state can really also drive up your monthly expenses. Like where my parents live, like let's say New York State, I just want to say how crazy it is there. Like I can't even imagine moving back near my parents because the income tax is super high. It's like, I forget, it's like 8%. But the property taxes, I just want to tell you, it's not the same throughout the entire state, but this is an idea. If you own a $200,000 home, the way property taxes work is taxed on the assessed value of your home. But let me just put it to you this way. I know people, including my parents, some people paying $800 a month in property taxes on a $200,000 house. That is insane. It is insane. That is more than a mortgage. That's more than a mortgage for other parts of the country. In Nevada, which is where I live currently, the property taxes are more like, for a similarly priced home, would be like $2,000 a year, which is like, I don't know, $200 a month. So again, if you are at that point where you're leveling up in your career, be aware of these things. And if you're choosing between different places to live too, I mean, obviously if you really want to live in a state, your family's there, you're just going to go do it. But if you're at that point, like where a lot of my students, where you have some freedom, be aware of these things. Because you got to look at these property taxes. I mean, it's a sad thing. Like that's one of the main reasons I had major issues with moving back to where my family is. I'm like, dude, I'm going to get gouged on every level of taxes. And if I buy a house, it's a complete liability until I die. It's like, how do you ever rest and enjoy owning a house when you're still paying $800 a month in property taxes? It's ridiculous. So these are just things to be aware of, guys, so that you're smart, you hang on to more of your money, and you play by the rules, but you know the game. So that's it. That is my very long video. I think I went longer than I intended to, but it's a very in-depth topic, and I want to know, what are your questions? I probably do more videos about freelancing versus having a paycheck. I have more in-depth information too, but it's more when you're earning more, or 100% working for yourself and earning be earning, a decent amount of money. But yeah, let me know what you guys think of this. I hope this was helpful. The last thing I'll say before I sign off is you can use income taxes to make money. This is something I put in my book. Accounting and bookkeeping are actually some of the most in-demand skills that continue to be in demand and will be throughout time because everybody has to keep paying taxes. And you don't need a degree to be a bookkeeper. Even Ernst & Young, huge accounting firm in the UK, removed degree requirements. There is a course I recommend. I might put a link in here. Bookkeepers.com. Ben Robinson and his course. It's like a lot. Like he teaches a lot like me. He's very transparent. He has real testimonials and he teaches people how to start a bookkeeping business. But you have to think about this, guys, is that H&R Block, these places, if you can learn all this tax business, which you can, it's more detailed and there's more like stupid rules than in digital marketing. But it's one of these things that's definitely learnable. You just have to know how it works. It's not like coding. It's not like biology where you have to spend years in school to understand very, very high-tech concepts. It's like something that can be learned. As I said here, just like learning Google Ads. And I don't know the specifics of how to become an enrolled agent or these things, but it's doable. Again, you don't need a degree, and people always need taxes, their taxes done. So you can do that on the other side of things as a gig. And the funny thing is a lot of these, like H&R Block, a lot of people, it's like a part-time gig. Like they do it seasonally. Like they'll just really ramp up into gear around March or February when everybody's getting ready to do their taxes, work their asses off for a couple months, and then they're done. But you should get educated regardless. I will never do this as a career, but I think it's a great opportunity. Because most people, they don't know enough about taxes. They weren't taught about it in school. They don't know ways to save money. There's also, you can really save your clients money by knowing how to take advantage of all these rules that rich people know about, yeah. So anyway, it's just an invitation to get educated on this. Now that I'll tell you this, guys, the last thing I'll say before I sign off, I didn't get educated on taxes. I didn't really take it seriously for even 3 or 4 years into running my own business. And every April was so stressful. Now, I have everything set up ahead of time. I have a bookkeeper. And when April comes, everything's ready to go. And I don't stress about it. And it's so much nicer. And that is the last thing I keep saying that. But bookkeeping and tax preparation are two different things. Tax preparation is the person that actually goes through all of your, all your data, all your income, and helps you put together what you're actually going to file with the IRS. And again, that person can be a CPA, meaning they have a degree, or they can be someone who doesn't. It's not required to have a degree. Bookkeeping is the process of keeping track of each transaction in a business. And I have to tell you, it's the process of keeping records of every single deposit and withdrawal. And when you're just starting out, you probably don't need a bookkeeper. Hopefully, I didn't. I was either used a ClickBank, or I would get checks from clients every once in a while, and I just, kept track of them in a spreadsheet. But when I started, growing my business, oh my God, I didn't want to have a bookkeeper initially. I love, as I said, beekeeping. No, it's bookkeeping. I didn't want a bookkeeper. I was too cheap. I don't want to pay for this. And I was like, oh my God, this is saving my life, my stress level, because every April I was stressing out over spreadsheets and Excel sheets. And I had friends who were actually good friends of mine who had their own businesses, but we were in different kinds of businesses. And one of my friends was very comfortable getting up to his ears in spreadsheets every April. I was like, dude, I can't do this anymore. Now that I have a bookkeeper keeping track of everything all year, they export a report, send it to my accountant, it's done. I literally don't have to think about it. And that is worth it to me. And that's why on the other side of things, I was saying that's why people will hire bookkeepers. Okay. So that was a lot. I hope you guys enjoyed this video or got value from it. I don't know if you can really enjoy a video on taxes. Leave some comments below, and I will see you in the next video.